All right, good evening, guys. Ken at Tortoise Capital Nightly Strategy Podcast for September 2nd, 2022. We'll start off with the regression line fractal framework. Get a fresh look at the market here. Last week, we identified this location as a critical state where, after the very long period of pain and suffering, there was a nice rebound that had crossed the all-important RL270. As far down as this fell, that's how far up it went and peaked and then rolled back over and then came down to this intersection right here. This is the intersection of the RL270, the 90, and the 10. You get this range compression happening here. The 30 is slowly coming back. And then this week, it voted down. So now we're concerned about a return to this support level, and then the RL10 reversal down here around 370. So this would be a sad face right here. Unhappy camper. On the market 150, so we're looking back 150 days now with a little more structure. So here's our 150-day look back. This is our 30-day look back. Then each of these are another 30-day chunk, so I like to see them as reference. This is our current 30-day look back here, consisting of three 10-day look backs, 1, 2, and 3. This is our 5-day zoom, and then our 1-day move. Now, one thing you'll notice is that the size of the 1-day range is large compared to the 5-day range, which is large compared to the 10-day range. So we're getting volatility increasing going into the weekend, and it's volatility in the direction of selling, and that's not good. So today we pushed back to the 30-day low and the 10-day low around 390, closed weekly here at 392, and we're now 17.8% off the swing high, and we're dangerously close to this support level here. 380 is the next target to the downside, followed by this support level around 370, and then the RL10 reversal, the 150-day low, is going to be around 360. So that's the Trail of Tears to the downside. Now, there was a nice gap up, and it felt like it might be trying to do that, and that became a bear trap, which smashed all of those hopes and dreams. But this still could be a support level here. If it holds here, then we would still be able to interpret this as a COTA 2 support, because you would see that we had several higher support levels. And on the upside, we've also got higher highs. So this is still temporarily got some possibilities to the upside, but this just about has to hold. If that breaks and it doesn't hold here, then that whole structure is gone, and then it feels like this. Because when we look at the downside, what you have is you've got these lower highs, and then you would have lower lows. So if it doesn't hold here and starts coming back down here, then that channel starts looking pretty bad. And then the real pain and suffering would hit if it got below 360, because then that's a collapsing dragon, and that makes this first little sell-off look routine. So this is pretty important going into the week. You know, that's a pretty important compound critical state. Perfect trading weather for short-term traders, if I'm being honest. My favorite time of year. All right, looking at the 30-day look back now, you can see we've got the 10-day to here, 20, 30. This is that crucial support and resistance level here that broke. When that broke, you get this. That's why we pay attention to those support levels. When they break, it's like walking on thin ice. Now, today was a bit of a bear trap because we'd had 1, 2, 3, 4 days down in a row, a gap down, but it closed up on Thursday. And then there was a gap up on Friday. So surely that's going this way, psych, and comes all the way back down to the 5, 10, 30-day low. So that is an enormous sell-off. And it closed poorly in the bottom 20% of the daily range going into the weekend. That's not good at all. But on the upside, it did hold at the 5 and 10-day low. And there is some impulse for buying in this market. But that, the preponderance of evidence is that that was a bear trap. So this is absolutely normal behavior for bear markets. Here's the 30-minute chart, and we're looking back 10 days. So now this is what 5 days and 10 days looks like. That's that same support and resistance level that when that broke, that's what happened. And I want you to notice these lower lows, lower highs. So each one of those becomes a collapsing dragon and a kata 2 to the downside. It wasn't until we saw this that broke above the RL10 and hump of the dragon. That was the first little bit of promising news, and then it gapped up and then smash. Not good. So this is the critical state right here at 390. That's a collapsing dragon, and the target is about 380. So there's a very thin margin of support right in here. It closed up at 392, so that's the size of the buffer that is protecting us against disaster. That is a thin line right there. Now, on the upside, if it gets above, that's about 403, then this becomes an emerging dragon. And that's when it starts getting positive. And then we would see the price ladder as the 5-day highs, the support and resistance. That's your price ladder on the way up. This is the tactical trade space, meaning that in this space we're entitled to go intraday trying to make some money inside here, but we don't have any belief in the long side until it clears that known resistance. And then this is instantaneously short, because that's the direction of the primary trend, is down and easy to believe in. Okay, and then if that breaks, you would expect to see some kind of move like that. I mean, that was a move from 415, to 403. That was a minus $12 move in a day. So this could easily drop to 375. So just fill your weekend with cheer. All right, let's take a look at our sector performance now. Here's the S&P. Our baseline today gave back 1%. The Qs were the weakest, minus 1.4. Emerging markets and diamonds were about the same as the S&P at minus 0.9 and minus 1. The Russell was the strongest of the weak indexes there at minus 0.78. Only treasuries were in the green, They managed to squeak back above 110, still in very dangerous territory right there. All right, let's take a look at the downside to see what lies in store. Again, the S&P. So now we have real estate, tech, consumer staples, lumber from minus 1.3 to 1.34. We've got VIX minus 1.8, clean energy 1.8, the FANGs 1.9. So that's Netflix, Facebook, Alphabet, Netflix, Google. S&P Biotech minus 2.1. Both of the ARCs getting smashed for 2.7 and 3%. Individual targets, Squarespace off 3.5. Tesla down 2.5. That's a gut punch. Now I've added the chip stocks back in here, so we're going to see some of those now. Nvidia, 2%. They're down 53% for the year. We need chip makers in America. That's a place to start. There's Texas Instruments, 1.9. There's Intel, 1.7. So that was the day for chip makers. Not so good. Robinhood, 1.8. Microsoft and PayPal, 1.6. Apple, 1.36. So even the key leaders, Microsoft and Apple in Techland, they were worse than their sector. So that's never a good sign. Those are all the companies and ETFs and sectors that you would expect would be leading us out of the hole. And so when the market is down and those are what's leading the market down, that's really a disappointment. All right, to the upside today. And there were some. Baseline S&P at 1.5. You got consumer discretionary, commercial real estate, finance, lithium, lumber, uranium materials, all the way up to break even. Bitcoin, Ethereum, Aussie dollar, agriculture now into the green, up 0.25 to 0.34. Agriculture still above 20, liking that. Blended commodities, oil, Mexico, 1.35 and 0.68. Marijuana, 1.57. Energy, 1.8. Mexico, 2%. Oil exploration, 2.36. So this was an energy update today. Wheat and precious metals, 4.67. Now, individual companies, Devon Energy, very strong, 3.2. That's never a surprise when they're the best performer out of the whole energy sector when energy's up. So that's why it's my favorite play. Alcoa, Cliff, U.S. Steel. So there's our metals. Metals were strong today, up between 1% and 2.5%. Rivian, 0.38. So mostly it's your energy and internationals today. You know, Mexico and Brazil. That's not the U.S., it's not Europe, it's not Asia. So they're almost the stealth trade now in the middle of the geopolitics. All right, we're going to go to the sniper trades and the traders charts today before we get into the report so that we can get closure on the day. All right, so here's a sniper trade in U.S. Steel. These are all 3-minute charts. So this one starts with a OR3. It opened up here. Here's the gap up move. Awesome. It runs all the way up. then comes down and closes here, and then it starts to fail, so I get short, and then it immediately reverses up and hits me for -1. So that's -1R. Again, OR3, short on that weakness, sharp reversal, take the 1R hit, -1. There's a COT at 2. There's a standard risk box. This is where it gets interesting. If it is able to clear the RL10, then this becomes an emerging dragon. So that's all good right there. So when I see that next bar is up already here, I'm going to get my risk out of this to there, and I'm going to lock in. I'm going to lock in at least that much. Check or hold. No lose plus dinner for 2. And we got a bad fill on this one. I had tried to get that thing locked in, and by the time we got filled, we ended up scratching. So now we're at -1, and then in spite of being up +1, ended up scratching out of that one. So now I'm a little perturbed. And because I'm perturbed, I'm incapable of taking the immediate resumption trade. So that got left on the table. That did not improve my frame of mind much. But now we've got another COT at 2. Here's the reversal. I get the PSAR flip, standard risk box, check or hold. That one gets paid. There's 1 unit of risk, 1 unit of gain, so that's +1. Now, it was at about this point during the day when the whole rest of the market was already selling off hard. Now, the metals were better, and so when even the metals peaked and started to fail, this became easy to take with the standard risk box. All right. So that's you can see that as a strong move and then a reversal. That's a supported fall crossing. PSAR flip. There's the PSAR flip box. Now, I did not exploit this one very well. Places that I can improve on this one. Well, this little shelf, which couldn't even get through the edge of the dragon, and certainly not the PSAR, that's finding support right where it found support here, and here, and here. And then it failed sharply. And then this failed sharply after another little sideways support. And then this low of the day failed. So those are 3 areas where with a little more focus, any one of those 3 are places to get a second position in. And now it rolls over, it crosses the baby dragon, goes through the dragon and hits the PSAR, and that's the trade. So that's 1 unit of risk. So that's about 1, 2, plus 3. This was -1, a scratch, and +1. So that all zeroes out. So now at this point, we're at about +3. Check or hold. So this one could have easily been 6 if I'd have been at all aggressive with extra positions in there. But that's all right. This one, the market was still selling off, so I wasn't eager to do this as an SSC. But what I did notice was shortly thereafter, what would we call that pattern right there? Caught a 2, correct. Because we have the higher lows. And it hits the PSAR, so just hit that one with a standard risk box. I'm looking to get back up into this structure, and then maybe here, and then maybe here if everything goes well. So this is the tactical trade space. All I'm going to try to do is, if price gets up into this region, all I'm going to try to do is get my risk out and lock in some gains. Okay? Gives about half an hour. There was some steady price improvement, but nothing exceptional. And then as soon as that starts rolling over and hits the PSAR, that's a good 0.5 R right there. You'll take that one all day. Now what I'm looking for is a violation of here or here as collapsing dragons. Or if it can get back above this, then that's going to be a continuation to the upside. So that makes this sort of the indecision zone. What's it going to do? I don't know, but I'm ready to play a breakout this way or a breakout that way. This is the zone of indecision. And that's pretty close to the size of the minimum manageable risk box. So that's a pretty good frame right there. I have no directional bias, and there is a reasonable trade in either direction. That makes this a critical state. And I missed it. You can be prepared, but you still got to act. So this is a PSAR flip, and I should have been able to hit that for sure. So that's one that got away. My only excuse is it's after 3 and late in the day, and I'm at about plus 3.5 on a day when the market was really disappointing. So I forgive myself. All right, next one up is Brazil. This one starts. There was yesterday's close. Here was the gap up. There's the OR3. I finally get into that after I've got a manageable risk box. I wanted to see that much movement. So I get in, and I end up getting out with a fractional loss pretty soon after that. And then this one becomes, if I recall, that's going to be a Kata 2 entry. Yeah. And routine exit. Now on this one, I don't mind if you exit in here. It was still only about a minus 0.5 or minus 0.6. And the market was starting to get weak already. And so I was thinking, yeah, well, maybe it could do this. That's fine. But then when it gives me that strong Kata 2 signal, I go ahead and take that and then just follow the trailing stop. Exits here for about plus 2. Check or hold. I try the re-entry Kata 2. It goes nowhere. I take about a half an hour loss. That's a stop and reverse because now the rest of the market is starting to sell off. That's easy. Now notice it comes down and holds right where it held before. So the fact that this is over right here is the least surprising thing of all. That's the move. And that's 1 unit of risk, and that's 2 units of reward. Check or hold. So now the market opened here, has moved up, over, and down, and is back here, but we're +4. Bear markets, you got to be a trader. That is an SSC entry. Standard exit for 1 unit of reward. Stop and reverse on the PSAR flip. 1 unit of gain on the downside. So that's about +6 overall. And this thing ends up where it finished. You got to be a trader. I don't know if there's a better argument than that right there. No directional bias. Just follow the price. It does what it does. Man, that's nice. Mexico. Yesterday's close. Big gap up. There's the OR3. Still hasn't broken out of that. There's the COTA 2 and 1R. 1 unit of risk, 1 unit of reward, standard trade, standard work. COTA 2 for a scratch, stop and reverse while the rest of the market is suffering, just like Brazil did. But this didn't fall as far, so you get out where you're supposed to, and you collect what you're supposed to. You collect some rent for 0.5. So this is +1, and this is 0.5. So we're at 1.5. And that's a COTA 2. Why is that a COTA 2? Higher lows, PSAR flip, standard risk box. Fail. So we'll walk out of that with +1. It didn't have as much juice as Brazil did or a U.S. Steel did. So you just take what's there and come out of that with +1. I'm happy as a clam. The traders today. Here's Tim trading crude. 3 minute. He is not in the market until this line, but he notices a nice strong move and a support level. Here's a COTA 2 entry all day, standard exit, and a PSAR flip reversal. 0.8, just like downtown. Perfect and relaxed. Here he is with the euro dollar pair on the 3s. He notices the leg 1, pause, leg 2, pause, leg 3. Gives it a shot anyway. Quick stop and reverse. Gets paid. Stop and reverse. Now here was an opportunity for a second position, but he takes the standard exit. Here's the PSAR flip, gets paid. Here's a COTA 2 short, standard work. There's a PSAR flip. Dude, 2.4 right by the numbers. This last little piece he got out quickly. 2.4, that's how you do it. superb. He was using hourly bars for framing out the key support and resistance levels so that he could anticipate where those turns might occur. And you can see that he's framing this out on the daily bars so that once again he can see where those critical states are. And that's where he was trading inside that little band today for his 3.5 hour. So really nicely done. That's using the multi-time frame, multi-lens analysis. All right, here's Woj. And let's see if the meetings did it to him again. I don't know if that was a meeting, but it feels like it. 2 quick losses. 3rd quick loss. 4th quick loss. And then a couple wins. -2. Yeah, I don't blame you for not wanting to trade that, but the market doesn't care what you want. It may still be able to keep firing. But meanwhile, Tesla more than pays for that. Quick scratch. Now, this is one where I want to see you hit that right here because you have this run up and then this fails. So you got the higher, or you have the lower highs and then a breakout below the dragon. I think you can get into that here instead of here. And then this should be a scratch instead of a 1 hour loss. This is a good reversal, but now you gave back too much. And then there's your PSAR flip. Good scratch, and now he's in line. So not especially elegant, but still more than enough to pay for that one. And then finally on the Aussie, good scratch, good scratch. He says, all right, I get it. Chop, wait for the news. News happens. Now this thing is in play, gets paid quick. There was the Kata 2. This is chasing. Man, we want that one. Good Lord, we want that one. But now he gets back in line with the market, brings in 2.2 here, 0.5 on the other one. So the sum for today was 2.5, and his week is 21.8. So patient accumulation of increments every day going to work. Just really proud of you. Nicely done. Let's see. All right, let's get to the reports. All right, so we're looking at the weekend reports. So we've got start with the dashboard one. Bearish normal, horrible on the short term, and the longer term getting weak. This is a rotation. These are the leading candidates, but you'll notice that only utilities are above their 4-month moving average. So even though these are strong, they're not ownable. So the blended monthly rebalancing is doing a good job of protecting capital. ETF2 exposure goes to 10%. Only one index is above its 4-month. You can see that the volatility is still risk off. It's at a critical state here, ready to fail or to give us a nice long swing. Critical state for volatility as well as location. It sounds like a sniper, and we've seen these already during the regular write-up. Into the BMR portfolios, that's telling you the tale right there. Only Latin America is above its 4-month moving average there. Utilities are just making me a liar about how good they are. When healthcare loses 2% in a week and is in the green compared to its peer groups, that tells you everything you need to know. Get paid to sit on our hands. ETF 32, again, only even utilities down 1.4. The four best all lost more than 1.5%. That's how bad this week was. Any strength in the Dow? None, except Walmart. Only Walmart was able to get out of the hole today. I guess Amgen a little bit. Okay, fair enough. Whew, DuPont and Intel. So if you need to go pick over some skeletons like the hyenas that we are, that's the bottom of this list is pointing you in the right direction. At 3M is just keeps paying off. Looking at the world market model real quick, the U.S. is still above average compared to the Euro-Asia guys. Not much joy anywhere, to be honest. In the ETF2 model, we're seeing some strength come back in the form of the bonds, because they're not losing as much, but otherwise it's like biotech and utilities. Nothing looking good. For the traders, we're looking at the ATR percentage for the most liquid on the basis of average 30-day dollar volume. Daily dollar volume of the last 30 days, I should say. So we're looking for things that are liquid and volatile, like energy, biotechs, oil exploration, semiconductors, gold miners. To the daily report, we've already seen those from the earlier. Right to the Dow Tactical. Everything's on an auto framer. Plenty of 5DDs to choose from. Ken H is going to have a lot of good ones to choose from this weekend. Breakdowns today in 3M. That was down another 3%, and that's a Godzilla for this past week. That signal matters. Verizon down big. And even Coca-Cola suffering some weakness there. In the ETFs, only one doji in gold. Lots of auto framers. Some collapse in Japan. And even consumer staples. So there's a lot of folks licking their wounds this week. After last week's sort of positive gains, all that good feeling is just gone. So I like reading this from the top of the stack downward, because that's where the best reward to risk ratios are. And some of our old reliables are in there. There's Alcoa, 3M, Microsoft, and Tech. Intel and the diamonds. The S&P itself is at 3.8 to 1. So this is a broad market condition. That's about as far down as I need to read to find some good trades in there. Only Chevron is in the squeeze. Not much else to see on that one. Radar screen for the Senior Godzilla. It's Godzilla time. Lots more Godzillas in the S&P. Now here's some Godzillas that are already starting to enrage, and then one-day sharp moves. All of these that are in green are ones that you should be looking at for. They had quiet 5 days and sharp 1 days and are already in Godzilla. That means that's the beginning of that painful move. That's how you find them. And then inside the tactical symbol set, added NVIDIA just in time, emerging markets, and Bitcoin. Godzillas. Few fireworks. Most of the things that were in fireworks and popcorn have now dropped down to become fence sitters. VLO, Valero Energy, is kind of like a another form of Devon Energy. So they both have the same kinds of qualities of being very volatile U.S. energy sector. And again, I like looking for the one-day sharp volatile moves, especially if the 5-day was quiet, then that could be the beginning of that breakdown. Campbell's Soup. I like these that are enraged on both the 5-day and the 1-day. And we're starting to see a lot more 1-day sharpness. Sniper Auto Framer with basic stats for you. This column, the reward to risk column in here, is the one to highlight now. That's telling you what the Auto Framer swing trade risk reward ratio is. Like there's 5.2 in Alcoa. It was a big day up today in Alcoa, and it's still 5.2 to 1. So that's something to consider. MACD, Four Seasons, being dominated, as you can see, by the winter. And whatever's not in the winter is falling. Same for the symbols. And then here's your tactical symbol set with all of the sniper stats. I like the ones, again, that are 5-day enraged, but also the 1-day sharp moves. But I especially like this. Real estate and staples that have been very quiet and are now starting to make sharp moves. You can say the same thing for diamonds, tech, all of these. All right. So this is the beginning of a vigorous move. This tells the story pretty well of the index. So bright reds are the breakdowns. Pale red is just in the bottom 20%. Only Mexico and Latin America broke out to 2-day highs. We saw that trade already. And in the energy sector, looking much better than the rest of the market. Walmart's the closest thing to a non-energy safety trade right now compared to the rest of this slop. All right, that's everything we got for today. We'll get this published and processed, and we shall see you tomorrow morning for the True Storytelling guys. Yeah, I posted the accountability and coaching video yesterday in lieu of the daily report because I just think it was so important that you guys listen to those guys getting it done, self-actualized, implementing the guidance themselves. You know, they're answering their own questions. They're asking each other questions, and they're also answering their own questions. So that's how you do it. Accountability. And it's like an alloy. It's stronger than the 2 component metals. All right, fellas, we shall see you tomorrow.